Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are. And this is Tuesday, the 27th of September, 2011. You know, on tomorrow, that's September 28th at 12:30 Central Daylight Time, I'm holding a live chat room, so you're invited. And to get into the chat room, you need an invite from us, so you have to talk to one of my brokers, 1-866-973-2077, or you may have received the invite already. That depends if you're on our list, and if we didn't call our list with the names already. And last night, I took the time, I stayed in the office late, and I wrote my gold report. It's unusual that I'll write it on a Monday night, but it is a Monday, and I've got to take care of it, so I did it yesterday. And I start talking about where I thought the market was going to rally up to, and you're going to see today when we go through this that I got pretty much what I was looking for, and why I'm looking for certain things to develop by year end. And I'm not going to spill all the beans, but this report goes into quite a bit of the detail, so you might want to take a good look at it. Gold up today, $53. You know, the silver was just down to $26 yesterday. Here's a market pushing 33 at one point today. Copper hit 307 and a fraction. It hit 348. You get these big bounces, and they're generally because the market fell too far, and they found what we're going to call a value area. And I'm guessing that the 307 area is now, let's call it $3 area in copper, the value area. China probably interested in the market. Yeah, the stock market is up today because so much hope is going that Europe's going to magically find its resolve and be able to take care of the situation. All I think that Europe's capable of doing is kicking the can down the road temporarily. I'd like them to succeed. Don't get me wrong. It's just that it's such a difficult task. I don't see how they can do it without, from everything I've read, restructuring of Greek debt. I think they can put a Band-Aid on it, but the problem doesn't go away, and I think the Greek people are getting tired. So I'm thinking that what's happening with all these plans and these funds that they're putting together, they're getting their banking system in some manner ready for the eventuality of a restructuring. That does not mean Greece is going out of the EU. It does not necessarily mean that those bonds and these crazy instruments that are out there, with, when I say crazy, they got monstrous interest rates on them, can survive. I don't think they can. And we're going to see how the system gets itself ready to adjust to it. That's what I think is going on. You know, when you look at this gold market, this is like a lifetime of activity in a month, going from 1923 down yesterday to the 1535 level and getting a neat little bounce out of that. And that's fine. It's a bounce, and you can see that. And when I put the swing line on the chart, I had mentioned yesterday that I thought the 1621.70 level, which was the price that gold closed at on July 31st, was important. And I thought that the market might pull back eventually and try to get there, and it did. And now the question is 1535 cheap enough, and did the market bottom? Well, my first instincts in looking at the moving averages are that, number one, now that this number is under 1940, that the market's going to find some problems. In other words, it's going to find resistance on rallies. The market only rallied back to, and I want you to look at this, 1536.90 is the 100-day average of closes, and the Bollinger Band is 1529.80. You're 1549. In last night's report, I was looking for this area, the combination of this 100-day average of closes and the Bollinger Band, and I intersected it on the chart and all for my clients, to take a look at that, and that should be the first area where maybe we run out of some oomph to the upside. And that's what I was counting on because of the option strategy, and it was a nice day today. That's all that I could say. One day doesn't mean anything. We have to see what happens. I would love to see the gold rally up back to the 1780s, obviously, for customers that own some calls. But I think today was a day where he took some money off the table. and now you wait and you see how the market can structure. Because if you're just playing for V bottoms or a move that just goes straight down, you're not going to get that. The market's going to go back and forth. So tomorrow I wouldn't be surprised to see that Bollinger Band on the downside, about $20 from here, tested again, and the market have to do some backwards and forwards action. I've put on this chart in this bright red for you the top that was made, and I think I should stand this way to give you a better idea. The top that was made in the June-July period. To me, that's very important. And then the market got over it in early July and ran and made three swings at big new highs. And finally, the markets pulled back down. And markets, when they make a retracement and they get back into an old support zone, have a tendency to pay attention to it, especially when you have fallen $380, $400 in gold. That's a heck of a bounce. And if you think that suddenly whatever caused that break is magically still there and going to make the market run back up, it's often not the case. You've done damage to this chart. The bears are in control of the picture. This is supply over the market, not under it. And what stopped the break was the old-time base. Now you have to restructure the chart as I'm reading it. Look at silver. You know, you were under the Bollinger Band 3 days and you popped over it today. I'm going to go back to gold. You were under gold 3 days or so on the Bollinger Band. You just popped over it. These markets, while they popped, and I'd love to see the rallies back up to the red line, the 18-day average, to think they're just going to go on a V move that way, I don't expect it. I expect the market's going to work around, develop some trading patterns, and work from there. The copper market got down to 307.15 yesterday, has lost its embedded stochastic reading. The odds favor an eventual move to the combination of price maybe going up and the 18-day average falling and them coming together. I say the two coming together that way because that's still 40 cents away. It's pretty far. So I'm going to assume this 18-day average has to fall a bit here. Might be down to the 360s, and that's where the two will meet, and we'll see what happens. But there's nothing bullish yet on the chart. Yes, price found its first value area, but it also came down from way up here, 450. This market lost a third in value before it found an area where it really gave us the first reasonable bounce in a very short period of time. And I do call 40 cents a very big bounce in a short period of time. In the crude oil market, we were staying under the Bollinger Band, and you know, what are the odds of staying under that band? 2.5% of the time. That doesn't mean you can't get back over it like you're doing and then start pressing on it again to the downside. It's probably very realistic. I'm looking for sellers to show up at about $86.50. So I'm not looking for this market to just run to the upside. I think you've done enough damage to hurt that. The Brent, the same thing. I'm looking for the 18-day average, the red line, to offer resistance on rallies in the market. I am looking for, in gasoline, the 270 area to be offering resistance. Now, when you take a chart like this and you lose your embedded stochastic, which it has done if it stays just the way that it is by the close, well, that often means a challenge of that average. The same thing, and I'm going to come back to the Brent. If you get there and you never were embedded in the WTI crude. So these are markets that I'd be paying close attention to, but to see where they're going. I want to go back a day in the bonds. And today was one of the days I told my traders in my updates that I thought they should nibble into some of the note markets. Didn't work out. These type of risks were in it. And that was, to me, the reasonability of the trade. When you lost your momentum in the bonds, and this is where the Fed is now targeting restructuring of their portfolio, I would guess that the 18-day average is going to be the support, and this is where the market fell down to today. So now we have to do the restructuring. Is the trend going to give itself up? Don't know. The market is certainly out of the overbought area. 140.21 was the last break low. Even if you take that out, you can't go short because your risk is back over 147. And think about it. This market, to get just where it's at today, has lost, for all purposes, 6.5 points like that. So I guess what traders are really saying is, hey, governments are nice, but we're willing to take risk on again. And in the past 3 days, it's amazing, 3 days, that's the size move you've had from high to low. Unbelievable is all that you can say. And look at the stock market today. It's in the green. It's acting pretty good. The foreign currency markets, well, I find them interesting. You're getting a rally like in the pound. You're getting one in the Aussie dollar, as I'd expect. You're getting one in the Canadian dollar. Anything to do with oil, obviously, and the metals, as they've rallied up this much, are getting a boost. And the dollar's coming down pretty good at 78.23. Now, the dollar's interesting in that for the first time we saw something happen in the Senate, and the government's not being threatened with closing down, yet the market's down because focus is coming back to the euro. I'm getting more and more convinced that this euro has got a major, major top in place and that it is not the good place to be. And we'll see if I'm right or wrong on that. But it's beginning to act like that, and those are the things that start to bother you. Want to remind you, tomorrow, live chat room, 12:30 Chicago time. Want a copy of our gold report? It's real simple. Give us a call, 1-866-973-2077, or you can go to our website and sign up for our futures trading kit, and our traders will get hold of you, 1-866-973-2077, or as you see right on the screen, our website. Have yourself a good day, and I'll talk to you all tomorrow.